Good evening, traders. Adam here from Bull Logic doing the market analysis with you. Another red day in the markets today. S&P down 0.31%. Whew. Had a good morning. Looked like everything was going to bounce. Everybody's counting on that bounce, and we just didn't get it. So we actually ran into that 1420 support resistance area. Remember, this is the big resistance area from years and years. This has been resistance and support, and now it's starting to act as resistance again. We came up to it today, and then we pulled back, actually finished in the red today. One thing that happened is we did not breach yesterday's lows, which is a nice sign to see. A nice yes, and then bad just because it looks like we could be moving sideways, working off these oversold conditions. As you see, we are short-term oversold on the stochastics, something that we need to work off. That way we can reset up the charts, and that way we can actually move lower. If we push lower now, it's a lot harder to have a sustained run, even to the downside. If we are already oversold, it needs to rest a little bit. That way we can reset up the charts and re-get everything focused, and that way we can get some better shorting opportunities. So we might see some sideways movement under this 1420 area before we actually push lower. One thing to put things into perspective, I know we talk about a market analysis every day, so we're focused in on the day-to-day moves. And you see the market's down 1.6% today and 1%, this day and 0.3% today, and you're starting to think, wow, things are looking pretty bad. We're talking about getting defensive, and everything's looking bad. Companies reporting bad earnings, etc. But just to keep it in perspective, from the highest point on 9/14 when we put in our multi-year high to our close today, we are only down 4.4%. If we go from close to close, it is actually only down 3.6%, give or take. So not that bad. We had a lot of big moves, but still we're in a corrective phase. Anything below 5% is still a very corrective move, especially after a big run up like we had. So we'll just have to see how we do when we come down to this 1397 support, which is about a 5% move from the high. So don't get too tunnel vision in the day-to-day activity or the day-to-day moves of the market. You get lost and you'll start wondering, oh, things are looking bad. But in the big picture, this is a very textbook corrective move. So keep that in mind as we go forward. I say that, yet we are still defensive because we are still pulling back. Once we start moving forward or higher, then we can say, okay, yes, that was a corrective move. But right now, we are still a little bit defensive until we get confirmation that this is just a correction off of a bigger picture, off of a bigger bull run. Till then, a little bit defensive here. Looking at the NASDAQ, a lot more weakness coming into the NASDAQ, trying to test that 200-day moving average repeatedly. Sooner or later, it's going to have to break through it. But right now, it is very oversold. Stochastics are down into the 11s, which is an oversold condition. Going to need to move sideways here before it breaks through that 200-day moving average. Any kind of break through that 200-day moving average might just be a wash and then a pushback higher. Russell 2000 also a little bit weak today, down same as the S&P, 0.31%. This one's still holding that support on the 200-day moving average. It could still actually bounce here. It's not that oversold. It's a little bit stronger of the sectors. I'm going to keep that one on watch. Looking at the VIX, it was down today on a down market, which is something we always like to see. It's just more volatility coming out. I got a feeling a lot more is going to come out tomorrow and into the weekend. Focusing on sectors, we need to focus on certain sectors because that's where the trades are going to be found. Financials, very strong, continuing this uptrend. Flat for the day, did not break the lows, did not break the higher highs and higher lows pattern that it's been having. It is a little bit oversold right now, just a little bit, but it is a little bit oversold. We could see a bounce here, which would keep this uptrend intact. Another strong sector has been these home builders. Home builders have been very strong. It's up here at 52-week highs. It looks like it's primed for a breakout at this 26, 23 level. Definitely, these are the sectors I want to go to when looking for stocks. These are going to be the strong sectors if I'm going to have to play stocks. Financials and home builders. Our other sectors are looking pretty bad. Energy, down. Utilities, materials, and technology, all looking pretty bad sectors here. I'm going to want to avoid these for the near term. I'm going to want to avoid these at least until things start improving. We can see a little bit more positive action coming out of them. For now, I'm going to focus on the financials and the home builders. All right, everyone. Again, Amazon and Apple are going to report tomorrow after the close. That should be a little bit of a market mover. We could see a run up in Apple going into earnings. It's been a very volatile stock here lately, especially with the announcement of the new iPad mini. People did not like the pricing of that. And now we're going to have earnings come out tomorrow, so we're just going to have to see how that takes us and how that takes the market. It could be a pretty big market mover if it does throw in some surprises. So good luck, everyone.